All right. Good morning, everybody. This is Nick Webb. I'm in for Dan Russo today, who's taking the day off. So bear with me. But welcome to Friday, February 1st, 2019. And we're off. We had a terrific month in January. Let's talk a little bit about that before we go into what's coming up and what's happened in the market yesterday and coming up for today. So it had the S&P 500 had another solid day. And the support is still sitting at 2,600, but we've had to move the resistance levels up as the market has continually sort of broken through each resistance level. We're now looking at 2750 to 2775 range. You can sort of see these three little peaks that happened in December. That kind of looks like where it'll the next resistance level is going to be. Just one thing to note, Chaikin money flow is looking really positive right now. And you'll see that in many of the charts we show you in the next week or so. But this is coming off a very, very low money flow base. So to some extent, Chaikin money flow is a little exaggerated now, and you probably should pay less attention to it now and more attention to it in a week or two when it's stabilized and you can get better comparisons, just as a comment. So let's go to the market in a minute. Federal Reserve has absolutely helped get the market going again. Jerome Powell has basically indicated that right now there's no need for rate hikes because the global economy is weakening and even the US economy looks like it's slowing down a little bit. So on the one hand, that's great news that the rate hikes are risk, if you will, has been taken out of the market. On the other hand, long term, when the Fed chairman basically is saying that the economy is slowing down, that's a concern for long term. So something to keep the market on alert. And there's no question that yesterday the market, the Fed news helped to propel the market solidly higher. After hours, Amazon reported the earnings were solid, the revenues were solid. Both of them beat estimates, but forward guidance was a little squishy after the market closed. So I think you'll see when the market opens today that people aren't overwhelmed with the Amazon report. And they'll probably be punished a little bit for it, at least in the early time. They also indicated that there's going to be a fair amount of investment coming up. So these guys are not sitting around resting on their laurels. They're continuing to sort of build new businesses. And so there's, on the one hand, increased opportunity if they nail it. On the other hand, it's increased risk. So that was the net for a very anticipated report, and that's where that came in. Facebook also reported yesterday, and they had and they're another sort of these bellwether FANG stocks, and they had a good quarter as well. The futures at 7 in the morning point to a relatively flat open. That can change, though, because coming up, we've got the employment report, the monthly employment report. That comes out at 8:30. I think the markets are going to be really looking at that. It's going to be kind of a messy report because you had the government shutdown with a lot of people that were out of work at the time, and some states were allowing them to sign up for benefits. And so it's going to be it's going to take a little bit of untangling to truly understand what the real employment report is. But this is really a bellwether that people are looking at. One thing I think is really important in this report that people should focus on is whether we see wage growth acceleration. If you start seeing the wages going up at a faster and faster rate, this could propel the Fed to come back in and continue to raise rates. My guess is they have a good sense of what's coming in this report and they don't feel that's the case. But that's the one area in this report that will be really interesting to watch. Oil on the last day of January slipped, but it's been a solid month. You know that the energy producers are out there breathing a sigh of relief, because as oil was going down below the sort of $50 level, that was getting to real dangerous levels for them. So they're feeling a lot better about where they are today. So you can see from the market, the Dow was hit by, believe it or not, Dow DuPont. They had a pretty interesting report come out where I think they beat, but they guided lower, and the market was really expecting a little bit more from them. So they were really disappointed. We'll talk about that later on. But that really hurt the Dow. As you know, that's such a narrow index. So relative, you know, you look at the S&P 500, that was solidly up. NASDAQ solidly up. Small caps solidly up. So basically everybody was doing just fine. Look at the communication services. We're going to take a look at that later on as well, because that's a, you know, turnaround from where it has been. So the stock of the day today is A10. Just stressing that this is not a recommendation. This is a computer-generated pick that goes through and sort of takes a look at strong industries, looks for stocks that are bullish or very bullish rated. And, you know, there's no manicuring going on here. This is strictly done by the computer. So, you know, this is an interesting stock. It's definitely one to look at. As I looked at the chart, as you can see to the right, it's a nice looking chart. It's solidly trending upwards. It's above its long-term trend line. It's got positive money flow, which again, less meaningful right now. It's sort of trending in the oversold category, so there might be a little juice there. Its relative strength has been really solid, and you can see it's been a very bullish stock for quite some time. As you turn over into the parameters that make up the power gauge, you know, obviously solid financials, good earnings, but not exceptional. We already talked about the technicals and the experts. They're expecting big things. So there's not a lot of short selling, and the analysts are boosting their ratings on this stock. So, you know, again, interesting stock. One that I think if you were to make a move on, you'd have to do a lot more research before you went ahead and bought this. So sector tracker, what's been going on? We talked about the communication services. In the last 5 days, they're all up almost 5%. So that's a real turnaround for them. You know, on the flip side, financials, I think all the interest rate news has been sort of dampening down the financial sector. But in general, look at it, you know, the market you can see is doing very well, because basically almost everybody is in the green. Even the one sector that's not is pretty close. So solid market for the last 5 days, and well, actually the last month. The industry focus we're looking at right now is mining services. You can see that it's underperformed the S&P 500 pretty significantly. Its power bar is weak. You know, there's more bearish stocks than bullish stocks, but it's trended upwards a little bit. Let's take a look at one of these stocks to sort of see what kind of drives it. I took a look at Compass Minerals, very bearish stock. What does it look like? You can see financials are horrible, earnings are horrible, experts. It's had a little bit of an uptrend, so you know the market has given it a little life, along with everybody else. But net relative to others in the S&P, its relative strength is weak. It looks like it's in an overbought situation right now. And, you know, we're still rating this as very bearish. So that's kind of indicative of what you're seeing in the mineral industries. A lot of big moves. You know, it's earnings season. So Charter Communications, GE, Facebook, all reported earnings. GE is interesting. You know, what a move. But I think it's you know, it's sort of looking like some of the risk is coming off GE with some of these recent earnings. Facebook, same thing. Nobody kind of had a good sense of where it was going to go, but it had a solid report. On the flip side, Dow DuPont, wow, down 9%. It actually beat earnings, but like I said, it only beat by a penny, and I think the market was really looking for more than that. And there's no question that the guidance wasn't where it needed to be. So overall, the market just pummeled that stock. Same with H&R Block, although that wasn't an earnings report. That was Morgan Stanley coming out on the downside, lowering their estimates, lowering their rating for H&R Block. And, the results were immediate and severe. And it's fine because H&R Block, it doesn't look that horrible, but Morgan Stanley really did a number on them. So a lot of earnings, we're in the thick of earnings season right now. Valero Energy had a nice beat. I mean, really nice beat, up by almost $1 on a $2 earnings report. So again, the energy companies are breathing a sigh of relief as oil prices have stabilized a little bit. And so nice beat there. Sprint missed by a penny. Conoco had again, nice beat in that energy area. Charter Communications. Now it's interesting. There's a lot. So Sprint and Charter are the exceptions to the rule. The companies in this industry, and we saw it, have generally been doing very positively. So real disappointment in Charter Communication. Northrop Grumman in the defense industry had a nice beat. What to look for today? A couple big ones reporting. ExxonMobil is one that you should definitely keep your eye on, given that Valero and Conoco had a nice report. This probably bodes well for them. Merck and Honeywell, both bearish rated stocks. Given Dow DuPont, I'm sure Merck is going to be watched pretty significantly. Honeywell, though, if you think about it, a lot of their revenue comes from the defense sector, which seems to have been doing pretty well during earnings season. So busy day today. So couple sort of fun charts that I threw in here was how broad is the rally? And one of the things you see is that 83% of the stocks are above their 50-day moving average. And compare that to what it looked like in December. I mean, it was just an absolute disaster in December, where it was down about 1%, beating their moving average. So this really shows you that the market's recovering. It's in that full rally mode. It's broad-based. It's not just a few headline stocks. It's really going all the way through. Dollar's still declining. I wanted to show you about the small caps because they rallied or are rallying as well, and just really having a spectacular January. So, it's not just the large caps; the small caps are right along with it, and they look very, very strong as well. So let's just, since it's the first day of the month, let's take a step back and sort of say, why was December so horrible and January been so positive? Well, in December, and I'm going to do it from a fundamental perspective because usually you're listening to Dan Russo here, and he's our technician and he's outstanding. So I don't want to step on his world. But I'm more of a fundamentalist. I take a look at what's going on in the market, big picture. I'm a big picture guy. Anyway, December, if you look at it from a fundamental perspective, estimates were being downgraded pretty much across the board, and they were being downgraded at a rate that we hadn't seen for several years. There were trade wars. The China negotiations were just starting. So there was an overall, not great trade war situation. And there were fears that the Fed was going to raise 2 and possibly 3 times in 2019. So obviously that's very bearish for the market. And that was the picture that you were looking in December. And so there was a lot of fear. There was a lot of angst in the market. Come January, a lot of those things have cleared up. Solid negotiations are going on with China. Now, obviously, you never know where that's going to be, but looks good. Earnings are beating expectations, so it's been a relatively good earnings quarter. And the Fed suddenly has turned, very nice to the market. So net, everything looks like it's moving in the right place. Do want to make a pitch if you are watching this. Sign up for Power Feed so that you get the sort of hardcore or the hardline, the slides delivered in your mail before you go and watch it on Power Feed TV. So with that, I say good night. Bye-bye.